Hello, this is Japanese Economic Review Channel. Today we are unpacking the BOJ's February 2026 Corporate Services Price Index. The headline YoY growth of 2.7% suggests a stable inflationary environment, but beneath the surface lies intense sector volatility. We will explore how specific industries and a powerful wage price mechanism are dictating Japan's B2B pricing power. Let's dive into the anatomy of this 2.7% growth. Looking at the macro trend, the total average index sits at a historic 112.1. The flatline era of 2018 to 2021 is definitively over. We have entered a new pricing regime, marked by sustained YoY growth above 2.5%. February's 2.7% YoY and 0.2% MOM increases confirm that corporate inflation is not a transitory shock. It is structurally embedded, indicating Japanese firms have persistent pricing power. What is driving this 2.7%? Broad-based B2B inflation is actually a myth. It is highly concentrated. Almost half of the total growth, 1.22 points, comes from a single category: various services. Information and communications and transport follow, but general services form the core infrastructure of current inflation. This proves Japan's B2B inflation is a localized, targeted phenomenon. This matrix highlights the friction between sectors. Only advertising at 4.1% and various services at 3.2% are significantly outpacing the 2.7% total average. Meanwhile, heavily weighted sectors like finance and insurance are lagging at just 0.9%. This divergence creates intense, localized pricing friction. It shows that the ability to pass on costs remains highly uneven across the B2B economy. February saw aggressive pricing spikes in cyclical, demand-sensitive subsectors. Accommodation services skyrocketed by 8.5% YoY, adding massive upward pressure. TV and radio advertising surged 8.4%, reflecting a rush in spot market demand. Simultaneously, ocean freight jumped 9.7% YoY. These specific accelerators provided powerful, isolated upward adjustments to the overall index this month. Conversely, supply chain-intensive sectors are demonstrating cooling pricing leverage. Leasing, road freight, and 3PL leaders saw their YoY growth shrink to 2.6%, 2.9%, and 1.8% respectively. This deceleration dragged down the month-on-month momentum. B2B infrastructure supporting logistics seems to be losing momentum heading into Q2, actively offsetting the intense spikes we just saw in other sectors. This is the most crucial structural shift. The engine of inflation is human capital. High labor cost services are growing at 2.9% YoY, consistently outpacing low labor cost services at 2.4%. This spread confirms a highly active wage price mechanism. Rising labor costs are successfully and systematically being transferred into service prices across the Japanese economy, replacing supply chain shocks. To summarize, first, the macro trend of 2.7% inflation remains structurally resilient. Second, tactical volatility is high, with aggressive price hikes isolated in cyclical sectors. Third, the wage price mechanism is now the primary structural driver of B2B inflation. Looking ahead, keep an eye on the next BOJ release on April 24th, which will capture crucial fiscal year pricing updates. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.